Hey guys, it's Eileen with Eileen Castle Realty. Today's all about the basics of credit. I sat down with Manny from Credit Rehab and he was able to answer a lot of good questions for me. If you're interested, stay tuned.
My name is Manny. I'm actually the owner of Credit Rehab. I've been in business for 11 years. I went to school, I graduated, I wanted to be a customs agent, right? They said, you know what, son, your background's good, but your credit's horrible, right? So I was denied my dream career, if you will. And after I fixed my credit, I decided to fix my mom, and the next thing you know, I fixed the neighbors and so on, so it became a full-on blown company since then. And ever since, I've been the owner of the company. Credit itself is just a promise, right, to pay back. It could be with the lender for just services, for goods. It's just basically the risk factor that you entail with them, right? And that's earned based on your payment history. Credit score itself, the way that's generated, there is a lot of formulas. It's actually about 2,000 formulas to calculate. It's all based on the necessity. So for example, if you're trying to buy a home, that's way different than wanting to buy a vehicle, which is also different than buying a motorcycle or a boat, right? Because now we have wants and necessities. So the lenders actually look at specific factors, and that's why we don't recommend when people want to buy a home with you, for example, that they go through like Karma or Experian or any of that stuff, because they're not really accurate. They'll give you a general idea, but it's not something that will go based off of. Why is my score different than Credit Karma? Why is my score different than any of the bureaus out there? And in a nutshell, basically what it is that, again, the lenders for a home look at specific things, right? The best thing that I can say for an individual that's trying to buy a home with you is go to the source itself, right? Go and get a report. Now, yes, I understand it's gonna become an inquiry, but keep in mind, you have 30 days to run your score multiple times within that same category, so that way it's not gonna hurt your score point-wise. Yes, it'll show up as far as what bank ran it, but it's not gonna affect the points on the report. You actually don't. Most people have a myth that say, they told me that I have to spend money to be able to increase my credit score, and that is not the case. What credit really is the fact that when you use it, it's supposed to be for an emergency. That's really what credit was made for. When you pay back right away, it shows to the lenders that you're definitely someone they can trust, which is why that translates to a higher credit limits, right? Or why the terms change, where you have now from 14% interest rates to 0% and so on, because now you're less of a risk factor. So you want to make sure that when you're using the credit card, you don't have to wait till the statement to come out to wait on the interest rate, right? Because that's what people do. When they leave money on there, now it becomes a revolving account, and essentially they're gonna charge you the interest rate based off the balance, right? If you have the money, go ahead and pay it off. You're gonna pay it off anyways. Why pay, $15, $30, $40, depending on the expense per month? And that's one thing people don't tend to understand. How is credit score calculated itself, right? There's multiple factors in that. So it goes into your payment history, the time of the credit you've had it for, also the differences in credit, right? You wanna have a variable profile in credit. So for example, revolving, installments, and so on, right? You also, they're gonna look at your balances. That's another thing. So if you, example, have a $10,000 credit line, but you owe 9,000 of it, that's not a very good account. That's 90% in utilization. So your credit score will drop based off of that. What is the best score to have? That is a very big question to have, right? Everything depends on what you're trying to get. Now, what is this credit score that you can manage life with as far as credit cards and vehicles? I say at least a 720 and above. Yes, people can buy homes for as low as 580s that I've seen. Now, will there be hiccups? More than likely. You wanna have the credit at least between 680 to 720 where you're not gonna have any hiccups. You're gonna be able to get your credit cards. You're gonna be able to go ahead and get your vehicles. You're gonna get your homes at that time as well. It's just now your utilization that's gonna be the next speed bump. Because most people, when I sit with them, they have the credit score already, but they don't make the income. When I sit with an individual and we fix their credit, and now they're at a qualifying score, the next speed bump would be that they don't have the income. And they thought that it was just based off of credit. That is not the case, which is why when we do the process, we coach them at the same time so that they're pretty much ready when it comes to buy a home. They're gonna be able to have the credit score and also have a very low to debt income. So now there's absolutely no speed bumps in the way. So there is many bureaus out there, but there's 3 big bureaus that banks go based off of. You have TransUnion, you have Equifax, and you have Experian, which is one of the biggest one of those 3. Now, when it comes to buying a home, they use your mid score, which is basically the middle average, right? So if you have a 680, a 690, and another 680, they're gonna look at 680. That's the average, right? Now, here's what each bureau entails. TransUnion typically is a retail bureau. For instance, Gap, Children's Place, Home Depot, etc., those would be reflected off of TransUnion. Yes, they'll show up more than likely on Experian, but TransUnion is the one that the target bureau we're going to be able to help you increase. Another thing with Equifax and Experian, they're more on the vehicle side. So when it comes to installments, those are the 2 biggest bureaus they'll look at, including homes. It's actually depending on what your ultimate goal is. I'll tell you this much. When you open a retail card, example, to name a store, let's just say in your case, Forever 21, right? When you go to that store, you get a retail card for that location. That's it. You can only use it for that particular company. So why not get an actual Visa, a MasterCard, where you're gonna be able to get off of, get points at the same time, be able to use it at that location and multiple locations. So now you have access to more stores, right? And gas, etc. The thing with that is when you only do a retail store, you're gonna be limited to a credit line. What I mean by that is this: you're not gonna have a $15,000 Forever 21 credit line, never, no matter what your credit score will be. Does that make sense? So you're gonna be stuck at 1,000, 1,200, and it's just gonna be a dead credit card because after time, you're probably not gonna shop there in the future. Does that make sense? Yeah. Now, what I would recommend is get a credit card that is either Discover, a Visa, a MasterCard, but I would only get focused on MasterCard or Visa or Discover. The reason why is because with time, your credit lines will start to increase. Now, at the beginning, you might start off with 300, with 500, maybe 1,000, right? Well, what happens is you want to make sure you keep the utilization below 30%. I always recommend 10, but 30% is more doable for the average consumer. The reason why is because once you surpass that 30% mark, you're technically a high risk. Now, what does that mean? Have you ever seen your credit report where you used, maybe Christmas time, you maxed out the card or so and your credit dropped? Well, what happens is that the banks are seeing that you're utilizing too much credit. And you might be, Manny, I've never missed a payment in my last 10 years of this credit card, right? Well, it doesn't matter about that. You're always gonna be stuck in that $500 mark or that $1,000 limit because, yeah, you never missed it in the last 10 years, but you've always owed 450 out of 5. They're not gonna feel comfortable lending you more money. Let's just say you're an 18-year-old trying to start credit. You're gonna get consumed with, emails or, hey, we suggest for you to apply for this card based on your income, based on your age. And when you're young, you want to take advantage of credit. Without really knowing how to use it, that's gonna be the flaw, right? So we wanna make sure that when you get credit, you stay below that 30% mark at least. Now, what I mean by that is this. Here comes Black Friday, you maxed out that $500 credit card, you will get a statement. That statement will say, hey Joe, you owe $40 minimum payment, You don't have any available credit. So here comes Joe, right? New at credit, and he only pays the 40, maybe 50, right? A little bit more than what it is. What happens is that Joe just left $450 as a balance for the next statement. Now that means that his credit, as far as utilization, it's gonna be through the roof. Very, very bad. So his credit score will now be affected and drop. The best thing to do for Joe was he should have paid at least 70% of that balance. So out of that $500 mark, he should have had at least $350 in payment. So the balance is now $150, which is now 30% or lower, right? The best thing again, it's either paid off in full or up to 10%, but the most doable percentage for consumers is the 30% mark. Now that's the best way to do it. That in about 4 to 5 months, Joe's gonna have a $500 trade line become a $1,500 trade line, or even $5,000, depending on his spending habits. But never try to max out your card and leave the balance there. I understand that they allow you to pay it month to month, but you're just gonna be paying interest every single month, and you're gonna be stuck with that debt for years to come. Well, that's it for the basics. Again, my name is Manny from Credit Rehab. If you have any questions, feel free to reach out to me. My Instagram and my phone number will be on the screen. I appreciate the invite, and stay tuned.
Thanks for hanging out, guys. If you made it this far, I hope this video was as helpful to you as it was to me. Till next time, remember to like and subscribe. You know the drill.